it's imperative that they have heard that, well, there's going to be a little bit of a slump in the economy in 2014, that the overriding trend between now and 2017 is going to be positive, and that they really need to be questioning whether they have enough resources, enough capital, enough people, enough physical capacity to produce everything that's going to be available to them in the way of opportunity between now and 2017. That's the overriding message. We think they should be borrowing money. Banks are lending more. There's a lot of private equity out there, a lot of private capital. This is a great time at these interest rates to be leveraging up, borrowing money, and moving your business very aggressively into new markets, new opportunities. Grow right now. Beware of your pricing. Also, they need to be careful about that because big companies are pushing hard on receivables. That's how they intend to increase their earnings right now in 2013. So they need to be pricing the cost of money into the price of their products and their services if they're going to maintain their margins. That's another major management objective for right now. I'd stay away from putting a whole lot more money into the stock market. We've talked about how it's impossible to time the market, but it sure seems poised for a correction. And along those lines, they should either be taking their profits off the table, or they should be thinking about putting stop-loss orders underneath all of their equity positions, as long as those equity positions are in ETFs or actual stocks. You can't do that with a mutual fund, obviously. The only mistake I'm still seeing is that there are still some CEOs out there that are reticent to accept that the economy is going to grow. And they're busy looking in their rearview mirror at 2008, 2009. They're busy listening to all the doom and gloom about how the U.S. economy is going to get dragged down by the national debt any day now. It's not going to be any day now. The national debt's clearly a problem. We talked about that, but there are other more immediate trends that are helping keep our economy moving in a positive direction, at least for the next 5 years, and we think for the next 15 years. We'll have business cycle downturns. We're not saying that we won't. 2018-19, we talked about will be a downturn in the business cycle. But when you look at the energy trends, when you look at the productivity trends, when you look at the reshoring of U.S. manufacturing, these are amazingly positive trends that will buy us incredible grace when it comes to dealing with our national debt and providing all of us with opportunities for growth. Yes, natural gas and oil shale production, the fracking, the fact that our oil dependence has gone down below 50% now. It's down to 41% as of 2012. We are the most productive nation on the planet in terms of our labor. We can compete with anybody, anytime, and we're proving it every single day. And we've got to keep on keeping on if we're going to maintain that position. I like to refer to the great management guru Deming, who said it isn't necessary to change. Survival is not mandatory. As long as we are willing to morph and willing to change and meet the challenges, we will remain number one as we have for the last 50 years. Oh, absolutely, because they tend to be more forward-thinking by virtue of being in Vistage. And two, history suggests that there's something very real to be gained by being part of Vistage. If you look at the Vistage companies and how they fared during 2008, 2009, they did much better than the average company out there. And that's because they went into it with their eyes open. They went into it with this board of directors or board of advisors that they meet with every month. They talk, they collaborate, they can avoid making the same mistakes that others are having to go through. I think they're much better positioned for growth and are a very powerful part of what's going to be supplying the upward draft in the economy as we go forward. If I'm going to leave you with one final thought, I think it would be to realize that we as Americans tend to be harder on ourselves and our economic prospects than the rest of the world. And that compared to the rest of the world, we're actually doing very well. And we can continue to do very well and avoid the temptation to give in to all the bad news that is out there, and focus on the fact that at a microeconomic level within each of our own businesses, we determine what history is going to be made. We determine what our future is going to look like by the decisions that we make every single day. And we can decide that we want to grow or we can decide that we want to be afraid. And if you decide that you want to grow, that's exactly what is going to happen, particularly as we look out between now and 2030.